Hello, this is Brian Shannon from AlphaTrends.net. It's Thursday, the 7th of August, 2008, and we had a little bit of selling here again today. And the only thing that I'm really growing more and more convinced of each day is that we are just in a trader's environment. The volatility is truly amazing, and if you're not taking profits quickly, they're going to just get taken away from you by the market. Case in point was that mind ray that I was mentioning yesterday on the blog. I showed a video that I had posted last night about how I got involved in the stock, why I got involved in the stock. It looked like a great short squeeze developing, and I had sold most of my position yesterday at a considerable profit. And then today, this stock just completely disintegrated. Fortunately, I got out of the rest of my calls, and now it looks like that we're back to just a broken stock here. And looks like the shorts are back in control, or maybe gaining control of this stock. But I would definitely not suggest going near it. Risk management is job number one. I don't know how many times I say that, but it truly is, especially when we're in a primary downtrend, as it just seems to be much more volatile in here. And yesterday we saw that the S&P 500 made it up again to this level that we've seen the resistance at 129, and was unable to get through there. Today it was pushed back because of more weakness in the financials. The Nasdaq 100 was strong because it was stronger relatively, that is, as the semiconductors were stronger. We'll take a look at that in a moment. But this is the little uptrend line that's been developing, and right now that's probably right around 125 and a half or so. This is where we will get a lower low in this market. We've got a declining 50-day moving average that the market is consolidating under, and guilty till proven innocent is what I like to say about a market with a declining 50-day moving average. It doesn't look like it's time to rush out and get aggressively short in here yet, but that day could be coming if we start to see lower lows and we see this trend, this emerging trend. If it breaks back down and basically through 125, then I think we're in for some deeper trouble. Interestingly, the bulk of the gains obviously came from Tuesday on. So if we take a look at Tuesday trading, that's August 5th through today's. What I've got on here, this moving average is the VWAP for that period. So this is the volume weighted average price that the S&P 500 has traded at since Tuesday. And the market is higher than where it started the day on Tuesday, but the average participant, meaning more volume occurred above the current levels than below it. So the average participant is involved up here near 127.75 or so, and that means that the average participant is down about 90 cents on this over the last 3 days, while the headlines indicate that we are up. So continue to see a lot of mixed messages. We've got a 10-day moving average above a 20. That just indicates more indecision than anything else. You've got to just be able to move very quickly in this market. As far as the 1 minute time frame goes, today chopping back and forth above that daily VWAP, and then it broke down here late in the day below the range of the morning, and then nice lower high and lower low right into the close, where we came down and closed pretty much close to the lows for the day. So it remains very volatile, very tricky. And again, this was yesterday's chart of the day. I said that these options went from a buck 30 up to 430, and fortunately I got out of them, and hopefully no one looked at that post from yesterday and is holding this stock today, because what I had mentioned on there is risk management is job number one, and you've got to be very defensive in this market. So let's take a look at the financials, because they were pretty much the culprit for the weakness in the S&P 500 today. This group got above the 50-day moving average for 2 days, and closed back below it today. And again, it's more the direction of the moving average than where the market is in relation to it. It's still lower, meaning the path of least resistance is lower in here. This market's guilty till proven innocent. I was emailing a friend today, and he was talking about the financials, and I said, basically I think that the financials in here are a sucker's bet, long or short, because there's just so much news that comes out on these things. One day it's Fannie Mae and Freddie Mac, then it's Citigroup, and then the government will come in and try and manipulate them higher, and they're catching longs and shorts off guard in either direction. I think if this market can get back above maybe 23, then again, it could lead to a little further strength overall, but we're in a primary downtrend. This little level of support, first level of support, held at $21 a share, but it looks like we've got a failed move here. The next important area will be down at about $19.75. Getting below that, then we've got some potential further problems ahead. Oil was up a dollar. The USO was up $1.02 today. Yesterday we looked at the proximity of the 30-week moving average in here, and I'd mentioned a lot of times you get a bounce near there, and we did get above yesterday's high near that 97 level, but still have a declining 5-day moving average. So mixed messages in here, but if you look at the declining 5-day moving average, the intermediate term, you still give the benefit of the doubt to the sellers in here. No reason to try and pick a bottom, as there's no evidence, just like we continue to see in this natural gas. There's no evidence whatsoever of a bottom, and just because it's down a lot doesn't mean it's down too much, because somebody else may be forced to sell because of a hedge fund unwinding or margin position or whatever. But the fact is, the trend remains lower in natural gas as well. So there's no edge in trying to pick the bottom in there, or any of these markets. Let's take a look at the IWM first. Actually, the Russell 2000 continues to be unable to get above that 72.5 level and the declining 200-day moving average. We've got that 10 through the 50. We've got mixed messages basically from the moving averages. So realistically, you pay attention most to price, what you always do anyways, because price is the only thing that pays. But this could be looking like maybe a failed breakout right in here. And we've got this high, we've got a lower high right here, and this afternoon we put in a lower low, and we're right at that 5-day moving average. So this market, the Russell 2000, looks to me to be in the greatest danger of breaking some critical support. And 71 is not necessarily critical, but I think 70 is. Getting below 70 would signal a bigger issue, and then perhaps we head back down towards here. But it's still too early to tell. It's a trader's market. If we look at the average price over the last 3 days in here, it's also above current levels. So since the Federal Reserve met on Tuesday, the average participant in the Russell 2000 is losing money. So that's what you have to remember. And we're coiling between this 50 and 200-day moving average. That means indecision. The semiconductors were strong today. They were up 2.2%, but where they come up to? Right up to that declining 50-day moving average and this prior level of resistance as well. So right up to that 50-day moving average that's declining, right up to this prior level of resistance. I don't think there's any advantage to chasing strength in here, but I think it did lend some support to the fact that the Qs were, those are lines from yesterday, the Qs were stronger today on a relative basis, and encouragingly they hold above that key level, which is $46 to $46.10. I think breaking below there, that's where we get a bigger move lower. Then you could call this a failed move at the declining 50-day moving average. It's early right now to sell short based on what we're looking at in here, but clearly the path of least resistance is lower on the bigger time frame, and that gives a lot of reason for continued concern.